Yeah. I played against my cousin. That nigga think I'm cheating now. I'm trying to told that nigga, man.
Yeah, we the coldest. I told him that.
Told that nigga.
I keep telling him that too.
All right, and we are
I
off,
ain't trying niggas
folks,
market
off
folks.
to the
Man, let me get
races
right.
on Wall Street. How you feeling? So right now, we're seeing the Dow Jones Industrial
Hold
Average
on.
down 287 points. You know that's United Healthcare. You want me to tell you what United Healthcare is doing? That's down
Why you not healthcare do that?
15.8%. Okay,
Right when
so
they told
don't
me to
even
buy
look at
it.
the Dow today. It is so heavily weighted onto United Health. That's going to be skewed all day long. Look at the S&P 500, which is at 69.64, about 20 points away, 22 points away from intraday record highs. It's up 13 points right now. The Nasdaq is up 124 points, up a half of 1%, and the small caps gaining slightly. Oil and gold, gold's down 19 bucks, while oil is gaining 16.14 there on the VIX, and the 10-year sitting at 422. So that's the big story right there. We continue to cover some of the big movers here for you on Wall Street. Joining me now,
What the
Diane
heck
King
is
Hall
going
with
on?
more earnings and taking a look at GM here,
Will the
which I
Bulls or
see
the
is up
Bears win?
4.8%.
It
I
is,
need somebody.
So GM did better
Hebert.
than expected for its most recent quarter. It beat expectations on both the top and bottom line. Adjusted EPS coming in at 251. Revenue coming in at more than 45.2 billion,
Where
close
are
to
you?
45.3 billion. So again, a beat on the top and bottom line. And just
Brother
demand
Market,
was
bro.
strong for its vehicles. It signals
What the
confidence
market gonna do to
throughout
us
this
today,
year.
bro?
It is working through some strategic shifts. We
Are
know
we
about
bullish or
the
we
charges
bearish?
that they said that they were going to take, so that has been accounted for. So there is, when you look on a net basis, there is a loss that looks messy on paper.
Snap,
But again,
bro. I think we're gonna
that is
break out.
tied to pulling back from those
I need
aggressive
somebody.
EV investments, restructuring in
Y'all be quiet,
China,
bro.
cost tied to cruise, robo-taxi, some
I'm
legal
in the trade.
moves. They're not ongoing
Oh, what
operating
the
loss. This is
fuck?
cleanup costs,
Hey,
and we
hold
knew
up.
about
Wait for
this coming
me.
into this
Oh, no, I'm already in it.
report today. So that's why you see the stock is not being dinged. It is moving
I want
higher.
to see a
There is a
retest. Give
signal
me
of
in the money,
confidence. Their
please.
guidance surprised to the upside for 2026.
That's all I
They're
do is think
expecting
about these
EPS between
kids,
$11
bro.
to $13. So that's essentially in line with what Wall Street was expecting here. Stronger than last year, and shows that management is taking a healthy approach to profitability. It's a combination. I was talking to Carl Brower earlier of iccars.com, and what he noted is that this is a combination of both demand and efficiency, right? They've been working on, more efficient measures, and it's paying off. They are, again, dialing back on their EV push. We know they don't have the incentives there that fueled the push into greater EV. It's not saying that they're not going to do anything with regard to EV, but it's the traditional gas-powered vehicles that really took the baton here. It doesn't look like it's letting up anytime soon. There is a tension, though, Nicole, and this is one of the conversations that I had with Carl this morning, between people holding on to their vehicles and the price of vehicles. People are still paying up for those who are buying, but there are some people who just have to hold on to their cars for as long as it takes, because cars are so expensive.
Yeah, at one point it was 12 years.
It still is.
Is
Yeah,
it
a little bit more.
12
It's a
years
little bit
now?
more now.
I mean, it was at the all-time high.
it is.
It's literally
It is.
at the all-time high because
It
it's
is.
so expensive to buy a car.
And
that was pushing car parts up, too, at some point. What about a name like RTX, used to be Raytheon?
Yes, exactly. The artist formerly known as Raytheon. So better than expected results here. Adjusted EPS coming in at $1.55. I think this was before $1.47. Revenue coming in at 24 and about $250 million there. So that's also better than expected there. So they're selling more, earning more, doing it efficiently is the theme that you notice when you look across their quarterly report card. Shares have been moving higher. Let me do a check on where shares are right now. Still higher by a little bit more than 1.5%. It may not seem like a lot in terms of the day's move, but when you look at it on a year-to-date, they're higher year-to-date. On a year-over-year basis, they're extending their rally up more than 50% on a year-over-year basis. They have strength across their three major segments, whether we're talking about Raytheon, so their steady demand for defense systems, Pratt & Whitney, strength there as well. Higher engine volumes there, and Collins Aerospace, so there's strong commercial aviation demand for that segment, those verticals there. So again, higher volume, so it's not just pricing here. There is real demand here for RTX, and we know that defense has been something that their analyst talks about, that we expect to see some strength this year, so that we're seeing that real time with these results. From RTX guidance, adjusted sales they're looking for between 92 and 93 billion for 2026. Adjusted EPS they're expecting that to come in between 660 and 680 for this year. They're saying they enter 2026 with quote great momentum and focus on executing on a massive backlog. Nicole.
Yeah, you have Northrop Grumman there. All of those defense stocks continue their story. Final thoughts?
Yeah, so Northrop Grumman, that is on our radar this morning. That stock had been moving lower earlier. Let me see if it's shaking off some of the worries. There was a high bar coming into its results, but they did do better than expected. Adjusted EPS coming in at 729. Revenue 11.71 billion for Northrop Grumman. There was some worry again that the kind of good news was already priced in. So we'll watch this one and see how it performs throughout the day. We know again the defense picture is strong, demand is rising. We know that the Trump administration had announced plans to increase the defense budget to some 1.5 trillion for fiscal year 2027. So the view for the defense sector has been that we'll continue to see demand there.
All right, and United Health down 18%. To follow up on that story, that's gold.com. Ringing bells here on the floor of the New York Stock Exchange. Diane King Hall. Great to see you. Names like Corning, also Cisco, General Motors, CoStar, HCA, Healthcare, Lam Research, Akamai are leading.
Somebody asked me what,
and Moderna are leading the way on the
looking
S&P
at.
500. So folks, keep it right here because coming up next, we'll have a great segment with Stone Wealth's Kenny Polcari. He'll give us his views on the market and some picks too, I'm sure. We'll be right back.
See if it keeps going. It's still in a little bit.
USGG.
PHGE. RDW.
Break this D up on
RDW.
the premium. If we can break D up on premium start here, we can actually drop harder than this low key.
USAS.
It'll be tough though. But if we can drop. A couple of 0.52, that'd be nice.
CYN. NVN. XTKG. VNA. PHGE. HCHL.
Damn, Carl, I didn't know you played video games.
RDW.
DTCS.
I thought you were shopping on this. Cool.
PHGE.
RDW.
Cool. Man, already. Down. I didn't even know that.
NBA.
While others recap the news, I help you read between the
There we go.
lines from what's moving markets to what's next with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
HYNC.
I
RDW.
was just playing with him.
DTCX.
That's my dog.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock.
There we
to
go.
see this person that I've always
There we
seen as a force in our family be
There we go.
vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
RDW.
There you go. There we go.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
They close today.
Welcome back to Opening Bell. Happy to see you all on this Tuesday morning. We are live on the floor of the New York Stock Exchange on the corner of Wall and Broad, and we are seeing stocks higher. Don't look at the Dow because the Dow today, well, do look at it, but you're going to see it has a down arrow because of United Health, which is down right now 18%. So the Dow is down 400 points, but the S&P 500, a really broader basket, it's 500 stocks rather than 30, is up about 11 points right now at 69.61, about 0.1%. Joining me now, Kenny Polcari, partner and chief market strategist at Stone Wealth, is with me to give us his thoughts on the market. Good morning. How are you? Your thoughts?
Great. Here I am back at the New York Stock Exchange. You know, it's always great for me.
Yes, you're home.
When they changed
Your
the
thoughts
name
on the
to-
market.
So listen, I love the market. I think the market is in a really, really interesting place. We're now really smack in the middle of earnings. We got about
100 companies that are reporting this week. Certainly had some big names this morning, and like you made a point about UNH and the Dow. The Dow is down. The bulk of that is UNH because it's a price-weighted index. So the UNH is going to have an outsized impact on the Dow, but don't look at that. You want to look at all the other stuff, and tonight is really going to kick off tech earnings season because we got Seagate and we've got Texas Instruments. Now, they're not the Mag 7, but it's going to set the tone. Seagate especially, right? Seagate, MU, and Western Digital all in that memory space, which I think is a key space. And you can tell by looking at these stocks over the last year, they have skyrocketed because that seems to be where the bottleneck, if there's going to be a bottleneck, that's where it is in the memory space. So I'm looking forward to what Seagate says tonight. I think it's already actually up today. I haven't seen it yet, but I think it is higher.
It was up about 1% a short time ago. Yeah.
Texas Instruments, I'm not sure yet, but I still think it's important to hear what Texas Instruments says about the future, because I think it's going to lay the groundwork for then what we're going to hear starting tomorrow with Meta, Microsoft, Apple, and Tesla.
All right. So I thought right now, looking at Texas Instruments, which is down 3/4%. The high on the day was 196.69. The low was 194.34. It's already had a pretty decent swing. Right? Okay, so you'll watch that. 195 today. It's right now just down 31%. Western Dig also on your mind.
Western Dig and MU, those three, right? Seagate, Western Dig, and MU are the three. The triple threat, I guess. We have the Mag 7, now you have the triple threat. The triple threat is in the memory space because that's where AI, where the bottleneck is going to be in the memory space. And you've seen it, right? We've seen all three of those names just explode over the last 12 months, and they'll continue to do better. I think actually Seagate's already up 30% this year. We're 4 weeks into the year.
So what's driving AI, the memory space, tech stocks? Why are we moving higher?
Well, because look, that narrative is far from over, and the people that are calling for tech to be in this bubble and it's going to end badly, I think they're way off. This is nothing like a bubble at all. It's not anything like the dot-com bubble for sure, because this is real. First of all, the companies that are in the tech space are real companies with real earnings and real products and real spending, and so I think that's going to continue to drive the narrative not only this year, but years into the future, which is why tech needs to have a significant position in your portfolio. Not so overweight, but you gotta have a significant position in tech and tech broadly, right? Whether you play it with individual names or whether you play it via the ETFs, things like the triple Qs or Dan Ives' ETF IVES.
Right, and that's been doing well. He's had some names in there that even on a day where we would sell off, like when you mentioned European tariffs. I mean, he came out that morning and said buy.
That's right.
His favorites that day were Microsoft and CrowdStrike. So had you bought that morning, you probably would have done well.
You would have done well. And listen, if you wanted his ETF, you would do well as well.
Probably, I don't know.
All names within.
Okay, let's talk about just overall. I mean, the feeling is that earnings fundamentally are improving and thus will improve stocks. Are you in that camp for 2026?
I am in that camp. I think we're going to see double-digit earnings growth, certainly this quarter. And I think we're going to continue to see earnings growth as we go through the year. And that's going to really form the basis of kind of the broader market move, right? Because ultimately, the market's going to respond to how well companies do, what their forecasts are, where they see themselves in the economy. By all counts, is not falling off the edge. Unemployment is at all-time lows at 4.4%. That's considered full employment. And the data continues to be strong. And so I'm very bullish. Now, I think the last time
Very bullish?
I am very bullish.
I mean, do you think that the S&P could go up 10% this year?
Yeah, 100%. I think the S&P is going to go somewhere between 10 and 15%. Now, that doesn't mean we're not going to have a pullback first, because I do think we're going to have a pullback. And I think we're going to have it because it's a midterm election year. So nobody should be surprised at all if we see suddenly mid-year the S&P down 12 or 15%.
That's when you buy.
That's absolutely when you should buy. But you need to be strategic at that point, and you got to look. You need to look at the names that are getting really beaten up for no other reason than they're just the high-flying names that are going to get unnecessarily punished.
Right, so you have to be strategic, be a stock picker, try and evaluate which baby's out with the bathwater.
And take it and make sure that you've got dry powder there to take advantage, meaning you have cash on the side that you're going to be able to take advantage when that happens.
Understood. When we think about what people worry about when they're talking to you about their portfolio, people are
retirement or close to retirement get worried. What do you tell them?
Right, so they get worried. Those people are more worried about the geopolitical. They're not so worried about the economy. They're worried about all the other factors around it that create all the noise. And that's just the point. It's noise, right? Yes, I understand it creates sometimes chaos in the market, but for the most part, it's noise. That doesn't price stocks in the long term. And so you try to you discuss it, you walk them in off the edge. But look, if you're somebody who's in retirement, your portfolio is going to reflect who you are and where you are. So you're not going to be, you're not going to be way out on the risk scale at all. And so they feel better understanding the way the portfolio is diversified.
Right, they'll be more conservative at
Much
that
more
point.
conservative at that
Do you
point.
ever look outside of just U.S. stocks? Are you looking to fixed income? Are you looking to commodities?
Yeah, so for retirement, actually for all our portfolios, yes, we're looking at European names, looking at emerging market stocks, India, Brazil, all that. We play it, or I play it, using the EEM, only because I don't live in those foreign countries, and it's easier for me to play it using an ETF. And the EEM has acted very well. It was up last year. I think it was up better than 20%. I think I have to remind
myself. 1 year it's up 39, 40%.
40% in 1 year. So 12, right, exactly. So that's been a great performer, and that will continue to be, I think, a good performer. The European names, the same thing. The EAFE, MSI ETF, which is all the big European names, is another way to play and give yourself exposure to Europe, unless, of course, you're going to be a stock picker in Europe and pick individual names. I won't, because, I live here, but I'll play it that way. We play it mostly that way. Fixed income is always going to have a place in someone's portfolio. Look, in mine, I have no fixed income. I'm 65, but yet I have no fixed income yet, just because I'm not interested in fixed income. I'm in this business. I'm in the game. I prefer equities. That's right. Yet, there are some other people that are in retirement that certainly want the stability of fixed income, and so therefore, they'll have it.
And I've always been so conservative. Every time I start a new job and they say, "What do you want?" I say, "Oh, a lot of bonds."
No, but you.
And then of course I look like years later and say, "Oh, gee." But you know what? I don't know what to do. I'm too conservative.
You and I should have a conversation.
Okay, Slade well, thank you for being here. We'll see if we have him back. No kidding. Thank you so much.
I'm patient.
Coming up, we'll take a look at some key levels to watch on the charts that you'll be interested in. Kevin Green is with us next.
Yeah, I'm not jumping in anything. I like to make sure, bro. Instead of just jumping into something crazy. You said what?
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
I still like to drop until we can, until premiums go to 0.34.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to the opening bell. We want to take a look at some key levels to watch. We're not that far off from all-time highs. For intraday highs, you could see closing highs. We need to go to our senior markets correspondent, Kevin Green. He has all the answers and the levels to watch right now here on the markets. Good morning to you, Kevin.
Good morning, Nicole. Yeah, we're seeing over 50% of the stocks in the S&P 500 in the green. I would say it's a little bit mixed when you're looking at the sectors. Communication services maybe seeing a little bit of headwinds. Information technology catching a little bit of a bid, and you are seeing maybe some gyration when it comes to semiconductors here. But to start off today's session, up about 0.25% for the S&P 500. I'm looking to the upside at 69.90 as your major area of resistance. That's where we saw the majority of those calls being transacted, at least earlier this morning here. And if we're able to see any type of reversal, 69.50 is going to be your first area of support. Breaking below that, 69.30. We are actually seeing a little bit more compression when it comes to the flows from this morning. As far as the S&P 500 options levels are the strikes that are getting a lot of attention, so a lot more compression. If you're kind of looking at the volatility index or the VIX, it's sitting at a 16 right now, though. And actually, yesterday we did see it inch up on an intraday basis. So I think we got to be mindful that obviously we have a lot of economic data as well as events coming on the calendar over the next 24 to 48 hours. And I think the market might be trying to figure out how President Trump's going to respond to some of these trade deals that have been completed here. So right now, for the most part, we are actually looking bullish, but I would still stay a little bit cautious when it comes to the vol complex. Might be a little bit underpriced compared to the risk that's out there.
Yeah, I mean, we still have the Canada thing looming. We don't know what happens with Medicare. There's different things that can still, and all the geopolitical events that you mentioned. 61.25 the barrel right now on oil. Tell us what you're watching there.
Yeah, you are seeing oil kind of advance earlier this morning. There were some reports around maybe some potential risk within Iran. It is getting close to the 200-day moving average. That has been an area of support sitting at around $62.17. But we are seeing a little bit of a bullish formation with the RSI making higher lows as well as MACD over that zero line and the 12 EMA above the 26 EMA. This one looks like it's trying to curl up to potentially break out. You get above that $62 level, 62 less than 20 at the end of this week, and it's on fairly low volume. Maybe you do see some follow through, and I would say the next area of resistance is going to be $66. On the options front, when you're looking at crude oil options, it is definitely heavily skewed to the upside here, Nicole. So somebody is pricing in, or some traders are pricing in an upside advance when it comes to the oil markets over the next couple of weeks here.
Look, and Ben Emmons is making the point that the dollar has been getting weaker. He said the dollar's getting weaker by the minute, losing close to 3% since Rick Ryder became the front runner, basically. It's very interesting because it's true. And also, as you have a weaker dollar, then you could see commodities moving higher, right? Like oil.
Yeah, I would agree with you. I'm not sure if the correlation is because of just Rick Reader alone. I think it's also because of some of the actions that we took last week, some of the comments around Davos, and you kind of see that within the yield space. 10-year yield still remain a little bit elevated here, and we are testing the September lows when it comes to the dollar. We break below that, you look at the $90 level or the 90 level for the Dixie as your next major area of support. It just depends on how fast we get there. If it's a rapid decline to the downside, Nicole, I think that's actually a headwind for equities as well as the Fed.
He continued on to say that as Rick has been, become the front runner, the risk of the yen intervention since last Friday, which you and I have talked about, and that this dollar move may imply that each of these two pieces of news could be, in fact, imminent, especially if Powell protests by signaling a hold until May. So, look, if they have yen intervention, if we start to get the who really is named Fed chair, those kinds of things could, in fact, move the dollar. So we'll see. Thank you, Kevin Green. Always breaking news with me, and we have the ability to interpret it as it comes in. So thank you, Kevin, for that. All right, our market meetup panel is here. Alex Scotty and Dan Grass, Senior Specials Retail Trading. Charles Schwab, thank you both. Your thoughts. Alex, kick us off.
Yeah, obviously a big earnings week, Nicole. Good morning to you. But so far, we're through about 15, 16% of the S&P 500 names. I thought it might be a good time to do a little quick update on the status of the earnings season so far. So through 83 names, about 16.5% of the S&P 500. So far, the beat rate on earnings is just shy of 82%, which would be better than the average. On sales, though, it's closer to 55%. So it's just kind of saying, hey, maybe there's some margin expansion, maybe there's some stock buybacks boosting EPS. But what really stands out to me, Nicole, is the average one-day price reaction is nearly negative 1%. So this historic beat rate, this aggregate beat rate on earnings of close to 15% is not enough. And it sets a really high bar and a pretty high stakes earnings, I feel like, for these four mega cap names that report in the next 48 hours.
This kind of pullback before it closes.
Understood. You make a good point. Even sometimes good news, and then they sell it off, sort of buy on the rumor, sell on the news. Then you're looking at currencies. We were talking a little bit about that. So your
next
thoughts.
candle don't touch 5.
Yeah, Alex was making a point to me earlier today that the yen and the euro yen are more reactive to weakness and other things. Bank of Japan has been coming in and trying to do some management of their currency. If you look at the euro yen and the dollar yen and the dollar, all have been showing weakness. over the last 3 days, especially over the last 3 sessions. I was hoping to see some sort of like reaction in metals, or just not seeing it. They just continue their climb higher. Nice pullback in gold today. Treasuries, we got the FOMC tomorrow. On pause, no clear path on when the next rate cut is going to come. The hedges are showing down at 3.25% right now. Is where short-term rates could go. We're not close to that right now at 3.58 in the 2-year.
I just watch price action.
Yeah, understood. And there's actually, an auction tonight when it comes to the yen, so we'll have to watch some of that. That could be a news-making event as well. Alex, your thoughts on some of the names that actually Ken Polcari really likes: Seagate, Texas Instruments, Western Digital, Micron. You're talking about a few of those right here.
Yeah, and this is kind of the appetizer for what I think is a really, really big earnings week that's really going to be headlined by Microsoft and Meta. Those two names collectively, going to spend potentially over $200 billion this year in CapEx. You throw in some of the others like Tesla as well as Apple. It's a really, really big week for earnings in terms of market cap. But Seagate's really an example of just this powerful memory momentum trade that we've seen. And so it's going to be front and center, and it's going to be an important name to kind of set the stage, in my opinion, for just how high that bar is set. You look at what the earnings are expected to grow about 40%. Now, the thing is, that would be, 4 straight quarters of deceleration on the earnings front, same for revenue. And so the stock certainly hasn't decelerated. We'll see if the numbers matter or if this momentum can continue.
Yeah, and Alex, just quickly, tonight's 40-year Japan bond sale, the auction, could be a sign for Money Matters to see if there's a willingness to buy, to buy Japanese government bonds.
Yeah, it's a complex situation in Japan right now because they want to stabilize their bond market, but they can't spike yields as that could potentially crash the domestic economy. So some thoughts are that they're going to maybe sell some U.S. treasuries to try to stabilize currency as well as their bond market, but time will tell.
Right, and that's the other part of it. Is it selling America or is it selling because they're trying to balance? So that is so intertwined. We talked a little bit about that with Joe Mazzola yesterday. We'll continue to follow the story, and thank you both, Ted Grant. Wonderful to see you, and Alex Coffey, thank you. Every single day right here on Schwab Network. I'm Nicole Petalides. So glad you are with us. 69.77. We are just a stone's throw from a record. Keep it here on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
And then I won the 31st. Yeah, at the end of the last month, I lost 3 days in a row, bro. And I was just like, wow, bro.
Welcome
but
to
I couldn't be mad though because the whole month of I had lost the whole month of December.
Strategy.
From the up until the end of that month. You know what I'm saying? So I hadn't lost. And then the 26th, the 29th, and the 30th, I lost. And then the 31st, I won.
Minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance.
When I have
same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas.
And then I'll have 2 or 3 red days in a row. And then I'll have another streak of like 25 green days. And then I'll have like 2 days.
I think one of the most important things is you're making a play in a risk-defying way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
it's weird too, cause I'll be like,
when my
so there's
grandparents
months
moved
I'll
here,
go
did they
like
know what
a
our
month,
family would
like there's
become?
I don't even
like
know if they
months
could
I'll go like
envision
a
it
month or a
to
month and a
leave
half without
everything
losing weight.
behind,
And
literally
then it's
come
like the
across
next
the
month
entire
start, and then
world.
it
I
will
think
just
that
start
we
being red
totally
like 3
met
or
what
4
their
days,
wishes were.
and it'll that's
Schwab
what
has
brings
been
my
with us for
average
almost
down to
25
like
years. Through
85,
purchasing up
80 to
houses,
85
opening up our business, having
those
children,
couple days in a
they've
row.
always been
But
there
yeah,
for
those
us.
couple days
I
in a
want
row will
to
bring my
invest
average
with
back down.
a company that can
If I
help me
did
give my
those couple
family a
days right
happy
there, I mean, it's a
financial
part of the
future.
market, of course.
You have 100% money.
Exactly, you get what I'm saying? That's
Stay
exactly
connected
what
to
it
what
is,
moves
bro.
the markets. Download the
But
Schwab Network
but it's
app
good,
and
like
stream
it's good that it
anytime
happens like
wherever
that
you
because
are.
I know when to size down. You kind of get what I'm saying? Like I know, like if market's acting weird and it's not respecting any of my trades that the other 20, 30 days did, then I'll know, like, all right, bro, you should probably go half size the next 2 days because market's kind of being weird. And then market only acts weird, and I catch those red days around days like PPI, CPI, NFP. Like those days, like news days,
Those are hard
days.
trading days.
Exactly.
Because the market can go anywhere that day.
That's because all traders are just waiting for news to drop, so market isn't really moving to a specific tool. You know what I'm saying? Those are the days it'll catch you.
Welcome to Morning Trade Line. I'm Sam Martis, live from the floor of the New York Stock Exchange. We have plenty to hit on both here and abroad. The Dow has been a very busy morning. So here's a look at what is coming up. We'll examine the outlook for the financial sector and how AI agents are already helping the big banks conduct business.
I don't know yet.
And
I'll
over
have
the
to
next
wait till
hour,
prices
we'll
go
have
down.
United Health and Seagate. Health insurers lower across the board this morning on Medicare rate news, and Seagate reporting earnings slightly close. It's a nice start to the day for some of those in the memory space. Let's take a look at where markets stand around half an hour into trading because it's been a little bit of a mixed picture this morning. Obviously, we've had a pretty diverse earnings day today, and that is what's driving some of the action. Roughly 2,000 tons of water. A few things weighing on the Dow this morning as far as some of these report cards are concerned. United Healthcare down 19% right now, Boeing down 2%. So that's certainly where the drag is coming from off the back of earnings. The Nasdaq, though, holding up 0.8%. As I said, it's a really nice day for some of the memory stocks off the back of the news around Micron. We've also got most of our Mag 7 names in the green today. And the S&P 500 is sitting at 69.75. They're up 0.4% right now. So we've of course seen 4 days of gains for the benchmark, but a little bit more of a mixed picture split across our major averages as we stand for this Tuesday morning. As we look ahead to more earnings, the FOMC meeting gets underway here. We'll get that decision out tomorrow. The FTSE 100, 0.7% higher. The DAX on the line to the upside. Obviously, Europe, a very big focus of the headlines this morning as we've got this deal now between the EU and India, the mother of all deals, as it's been called. I'll talk about the details of that later. The Nikkei 225 powering ahead 0.9%, and the Hang Seng Index was up 1.4 overnight, so it was a more risk-on tone across Asian equities as well. The 10-year yield sitting pretty stable there at 4.22. We've gone back to this sort of range-bound, sticky action there in the bond market, the US dollar index. We know the story there, some weakness obviously, 96 there for the DXY. And gold is taking a bit of a breather after these records we've seen, obviously punching through 5,100 yesterday, but we are down across the precious metals today. Crude oil is at $61 a barrel, and Bitcoin is trying to nudge higher. We're at 87,000 and change right now on the cryptocurrency. So there's a look at your setup across all the major asset classes as we stand this morning. Some of the foreign market action today off the back of some of these headlines. But let's get to Kevin Green, who joins me now, because obviously not a huge week, or I should say day, on the data front, but we do have some consumer confidence out from the conference board, KG. Just talk us through what you're seeing there. How are people feeling about things right now?
Yeah, we actually did see a pretty sharp drop to the downside when it came to consumer confidence. The reading for January came in at 84.5. Street was looking for 90.6. The previous number was 94.2. That was actually revised up here a tad bit. We know that there's a lot of volatility when it comes to this report. It's based on, obviously, inflation expectations could be priced into this, also looking at the employment picture as a whole. And we also have the S&P 500, the S&P 500 is also a factor within this report forward as well. So a dramatic drop. Now that actually could be conducive for equities moving a little bit higher if consumers are not as confident on spending money or the economy at this point in time. They actually could pull back on spending. That could have an impact when it comes to top line revenue growth for maybe some consumer discretionary industries and things of that nature. That also could lead to lower inflation over time here. We also had the Richmond Fed once again having that number coming in lower than the street's expectations. So the market's reaction right now, I would still say still positive on the day's session. You are seeing the markets trading at relatively the highs of today's session, but overall once again a very volatile print, an aggressive move to the downside based on what we just saw and on December's print.
Yeah, it could be a case of that sort of cliched mantra in the markets this morning, a bit of a slightly bad news, good news for the markets, because it could mean that the Fed moves faster, at least as to what they're going to say tomorrow about the future path of rates. Obviously, we know that they're going to sit on their hands as far as what's being baked in here tomorrow, but it's obviously about that commentary. We've seen the memory stocks doing some of the heavy lifting today. Very earnings-driven kind of morning for us. As I said, we've got a few Dow components that are weighing on things as far as the mixed picture is concerned. But let's take a look at some of the industrial earnings. You're looking at Boeing, RTX, for instance, Northrop Grumman. What have you seen there? What are they telling us?
Well, we are seeing Boeing down about 2.5%. I think this is more of a buy the rumor, sell the news type of reaction for the stock. It has actually had a really decent run over the last couple of months here, and they were able to exceed the street's expectations, and even their guidance moving forward for the most part was actually better than the street's expectations here. But once again, very high bar going into this. They are continuing to reiterate their guidance for being cash flow positive in 2026. That's obviously going to be looked at by a lot of analysts as a positive, that they have seen some headwinds over the last couple of years or so, and they're really looking for additional approvals and ramp up in production for a lot of these aircraft. So Boeing not really a surprise here. RTX also seeing a situation where we are backing off. It's still up about 1.3%, but demand continues to be fairly high. Their guidance moving forward is also aggressively higher than the street's expectations in some respects here. Now, technically speaking, we are kind of getting closer to the area of resistance. We have seen the stock pull back here a tad bit, but overall, fundamentally, they are still seeing very strong demand, not only when it comes to new orders for the F-35 engines, but also servicing the existing engines that are out there as well. That's a tailwind for them. And overall, I think the industrial space in general has had a pretty decent run, but you are kind of seeing a little bit of a rotation because of the valuation for a lot of these names, especially if you're looking at a name like a Caterpillar or even a GE Vernova.
Yeah, a bit of a mixed post-earnings as we see across the defense names, industrials this morning as well. Let's just switch gears to obviously some of these trade headlines. I don't know about you, but if markets were people, I'd like to be the South Korean Kospi today. What trade tension? Just shrugging it off. A record overnight. I'll get into that later in the program, but let's talk about the EU-India trade deal. I mean, what's the significance of this other than the fact that they're talking about this as the mother of all deals, and it took about 20 years?
Yeah, you are seeing some progress being made, and let's see if this deal is actually going to be signed and approved by their parliament in India. I think that's going to be a big hurdle. We have seen some issues when it comes to our trade deal with India because of their parliament. But at the end of the day, this is to reduce tariffs to zero over time, excluding some sectors like agricultural as well as autos. But you are seeing a lot of countries and conglomerate of countries, if you're looking at the EU, looking at other places in order to do deals instead of the United States. I'm not sure if this is completely trying to get away from the U.S., but they are making some strides. And you talked about that Kospi index. It moved over 1% overnight. You are still seeing a lot of optimism in the international markets, and they continue to outperform us here in the United States. Now, I have not seen yet a response from President Trump over the White House. Let's see what that rhetoric kind of looks like, and if that's going to cause a little bit of volatility in our markets, maybe a re-rating higher when it comes to tariffs on the EU or even on India. But overall, this is actually a really monumental deal. This also comes on the back of China and Canada trying to work out some form of a trade deal as well. Once again, trying to diversify themselves away from the U.S. And this seems to be a trend. I think you are also seeing the dollar moving to the downside because of this trend, especially over the last week, given the geopolitical events that take place as well.
Yeah, certainly. We're hearing that Keir Starmer is likely to go to China as well. He's looking to try to straddle both sides, the U.S. and China. And I mean, commentary aside, the facts are that the administration wanted 90 deals in 90 days. I heard this morning we've got 2 in 10 months. which are out of Southeast Asia. 27% of tariffs now have been enacted, which herein lies, I suppose, the lack of visibility for some of these companies when it comes to these earnings, what they can say about tariffs, maybe the inflation picture as well, as far as some of that pass-through. But let's talk about the commodities space. Obviously, we're seeing
ours is going crazy right when I get out of
morning
it.
off the back of these records, still up. You know, obviously silver 106 right now. Gold manages to hold above that 5K level. But just talk us through the section here. I mean, is this just obviously sort of taking off the back of the big rally we've seen? Does this continue? You know,
it might. I mean, if you're kind of looking at silver, the future contract here, yesterday was actually very interesting from a technical standpoint. We obviously saw that move to the upside to $117.70, and then that sharp reversal. So that's actually kind of a bearish reversal candle. But what's also complemented with that is the volume. Yesterday's volume exceeded 318,000 contracts for the front month. That's the highest amount of volume that we've seen since August of 2020 or 2011, if I'm not mistaken. So you are seeing a significant, or 2020, my apologies. You are seeing a significant kind of reversal actually taking place just in-house here. When you look at the futures contracts, there's also a lot of commentary right now between the difference of the spread between the futures and where they're trading at and spot. This is where you are starting to see more of a premium taking place. That's because the physical demand is still outstripping supply at this point in time. But do we actually see a breakdown when it comes to demand over the next couple of months, as these prices obviously will have an impact on the industrial segment as a whole? Now, could this be the reversal? It could, but we've had a fake out before. Actually, back in middle of December, late December, we kind of talked about, once again, another volume spike, a bearish engulfing candle that took place. We saw some follow through for about 2 days, and then we started making new all-time highs when it came to silver. So right now, we kind of wait till the price action really confirms, but yesterday's candle was notable.
Yeah, absolutely. And I think you were on the money when you said 2011, because I was actually just looking at the SLV, the silver ETF, and it was pointed out that as far as that volume is concerned, the prior records were May 2011 and February 2021. So that just gives you an idea, obviously, what we're seeing as far as some of those flows are concerned as well. KG, really appreciate you getting us across some of the data and the key stories and movers for us this morning. I'll speak to you a bit later on. Coming up, we will take a closer look at the financials and the impact that AI is already having in banking. Morning trade line is back after this.
And the money that you put in, there's a lady, bro, who put in $100 every time she got paid for Bitcoin, bro. She made like $7 million from Bitcoin here all-time highs, bro. And she had only put in like 30K.
See, I do that to World Liberty. I put like $50 in there every time I get paid. I probably got, let me look, I'll tell you exactly how much. I probably got about $800-900 in stock in World Liberty. $800-900 in World Liberty. Bitcoin only got $68. But I transfer my shit between Bitcoin, Ethereum, Solana, and World Liberty, and then it's another one that I transfer back and forth. Like, when stock rises, I'll sell that shit, buy more of the other one, because I know the other one's gonna go back up.
Right.
These 1-2 cryptos I got, they drop when the other ones rise, and then those other ones rise when those two drop. So I just sell and buy opposite of each other. But my World Liberty, I keep that shit.
And like any.
Got that back.
It's important, bro.
I'm Nicole Bettolides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Yeah, that's why I even got the report. They're just a good idea to have.
When I ain't got the time to trade like I'm doing now, bro, I switched all my shit straight into stocks and cryptos and shit.
It's where I get all your office supplies.
Yeah, 100%.
Your golf balls, your fancy coffee.
You should not just jump straight into it.
It's everything in one place.
Absolutely. You shouldn't just do options unless you know what you're doing.
Schwab.
Usually,
Everything
you gotta read
investors
the
need.
options.
Shouldn't even touch them.
At Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
Just a random Joe, just buying cryptos and shit. Options is where it
Invest your way with Schwab. No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
Like $70 at the time.
Back on Morning Trade Live, UPS modestly higher this morning after reporting strong fourth quarter earnings and guiding
I can't even think, bro. I can't even think of no trade. Like,
the company
the
CEO is
only
saying
trade, I think
2026
the
will be an
only trade
inflection
the
point in
only
the execution
big
of
trade I've
UPS's
had out of in another
restructuring
ticker
efforts.
except for
We are
SPY,
trading
bro,
higher by
was probably
2.3%
like I told
right
y'all
now,
before, Roblox. It ain't getting
109.52
nah,
on
Roblox,
UPS.
bro. I
Let's
caught
take
like
a
a
look at some of the
freaking
other winners
1100%
on the
in
session
Roblox
thus
in like
far. And
freaking
Corning is
not
really
even a
leading the
day.
pack
It
here,
was
up
like
12.3%. This coming off the back of
an
a
hour
deal with
ago.
Meta, $6
I
billion,
couldn't
taking
Roblox,
it through
Roblox
to
is like
2030. This is
G,
for
what did I
fiber
tell you to
optics
stream years
cables
ago and
to
invest your
supply
money
to their data
years
centers.
ago?
So very much getting a boost and a lift from
Nah,
that.
hell nah.
General Motors is
Roblox,
also higher. This, of course, coming off the back of its beat on earnings, a new $6 billion
Go stream
buyback plan
Roblox,
there
nigga. You want
as
your
well. And
shoes ugly,
Western
you want
Digital,
them
as I
average
mentioned, a
shoes,
very
you
nice
get
day
that
for
shit in a
memory
day.
as we look ahead to
Roblox,
Seagate's
Roblox.
earnings, which will come
I
this
took a
afternoon. But
swing
these
trade
are
on
some of our
Roblox and it went
outperformers
1,000%
across the
in
session
like
today.
3 hours.
We are
So it
up
was
on Western
crazy.
Digital to the tune of
Roblox.
5%.
Yeah, I was watching on
Let's take a
Roblox.
look at some of the losers on the session,
Yeah,
and
it
no
was
surprises
crazy, bro.
there that healthcare and some of these
I feel
insurers
like
are
Xbox
among the
stock
bucket
is
here,
probably
down
going
in
up
double
soon.
digits. So the
Bro,
price
I feel like
action
Everybody
is looking
transition
pretty
to
ugly
AI.
right now across this space. It coming off the back of a Wall Street Journal article about the US proposing to hold payments on private Medicare plans that will be flat next year. So we are seeing a
Yeah, and it's
big,
a lot
big
safer
move to
too.
the downside
So
in
that's
reaction
why I
in
said I need to
response
go ahead
to
and
that
get.
story.
I'm
We'll be
start a
tracking
long-term
throughout the rest of the
portfolio, bro.
program.
But
But
I
of course,
think
United
before I
Health
do
is
that, I
also
think
out with earnings.
wanna
That's not helping though
I
with
wanna
respect to
get
that story.
a
Let's switch gears now and bring in our next
high
guest.
interest
Joining us
yield
is
account first,
Simona
bro, and I could just so I can trade
Simona
out of the
Alaman,
yield
who's the
account instead of
co-founder and
trading from my name.
co-CEO
You know
of
what I'm saying?
Prometeo.
I
Thanks so
want to
much
give me
for
I want
joining
to
me
get an
this
IRA
morning.
account so
Look,
I
I
can
wanted
trade
to
from
get
my
your
IRA
thoughts, just
account
because
so
obviously
it's not
you're
taxable.
looking
Like
at
a big
AI in the
percentage of
banking
it is not
sector. You
taxable
look at
since
the
I'm trading from
financials. That's
high
obviously your bread and
Later on, you
butter.
can.
One of the big stories that we've been tracking, and I know you've
I
commented on this
I do want to get
before,
you said what I mean
about
by
these
it.
credit card caps.
So
What have you got to say about that
yeah,
with
so my
respect
boy
to,
Ray,
you know,
so my boy
the
Ray
market
put me on to this,
reaction
right?
and
He made his
obviously a
first
lot of these sort of
million
influential
day trade
names
like 2
weighing
years
in on
ago.
this, pushing
And what
back?
he
Where
does
do you
is
see
he
things?
trades from his Roth IRA
Well, I
account,
think that
right? So he trades.
the thing
He
with
doesn't trade under his name. You know what I'm
rates,
saying? He's an
the
engineer.
credit card
He
rates,
was an engineer,
is
but he's a
that
day
they
trader now.
expose
He
how
doesn't trade
dependent
under
the
his
U.S.
name.
system
He trades
is on
under
credit
his
card
Roth
rates,
IRA account,
and I think that
and I
that's
think like
per se
50%
one
of
of the
his
headlines.
earnings,
You know,
the
we're
50% of
talking
the money
about
that he
80%
makes
of the
is
population
tax free.
accessing credit through
Although he
credit
won't be able
cards,
to touch it,
and
he can't
also
touch it.
1.2
He can't touch
trillion
that 50%
in debit
for I
card
think it's like
balance,
5
in
years
credit
or
card
something
balance,
like that. But
which
just
is a
think
lot,
about
you
it.
know, and so
You
that
trade,
sizes the
you make.
opportunity, you know.
Let's say you make
We're
over
also
a
talking
5-year
about a
span,
system that has
you
been
making $2
historically
million a year,
bundled.
and then
You
you
have
put
a
it all
payment
into a
tool
Roth
and a
IRA.
credit tool that
1
go hand
million
to
for
hand,
5
that are
years is
combined.
untaxed.
But that's not
While
necessarily
the
how it
other
should be right
million
now,
plus
you know.
I
And
you
so
just
thanks to
you
tech, right now we are able to unbundle that
you have
system,
to
you
put
know.
exactly
And so you have
But after
disruptors, you
5
know, and
years,
disruptors
but
can
after
raise
5
to a
years,
task,
it's his
and
money.
then
You get what I'm
can
saying?
see this opportunity
So he's cycling
as
it that way.
an opportunity to somehow
Yeah.
robust
I
the
don't think I
system,
know.
bust
I don't think I know too much about.
penetration through other tools,
I don't think I know
which are
too
not
much about
necessarily
Roblox, but I have like
credit
an
cards,
opportunity
okay? And so I think that the opportunity is huge here, and I think that what we will see is disruption. We will see new players jumping into the space and providing new credit mechanisms, new credit access to new segments, all of this powered through technology.
each one of their accounts. So
Okay,
each year,
and
as
just
they
as
grow,
far
I'ma
as
just leave the
AI
200K in
and
there,
the
and each
impact
year it'll
that it's
produce
having
an
on the
extra
banking
50,000
sector, talk us
non-tax.
through,
You
you
know
know,
what I'm saying?
obviously what
So
you're
by the time
seeing
they
as
turn,
far as
yeah,
efficiencies, because,
exactly.
you know, I know this is not
And then as
something
they
that's
when they get
particularly
older,
new
I'm gonna
as
allow them to
far
trade
as, you
from
know,
their
the
IRA
productivity
account.
gains,
You get what
particularly
I'm
when it
saying?
comes to
I'm gonna allow them
cross-border
to use,
payments,
maybe like a nice
when
little
it comes
5K.
to
You
addressing
know what I'm saying? A
fraud
little
as well.
5K
But just
from
talk
the
us
whatever
through
is it,
what you're
the
seeing
percentage of
as far as some of the
exactly.
use cases prices here and the efficiency and productivity gains as a result.
There you go.
Definitely. I think that 2025 was the year in which AI moved from experimentation to full deployment. So AI is no longer a toy, is no longer a pilot. AI is running the bank. And I think that this is a major shift from what we have seen before. AI is right now an orchestration administration layer, and I think that the key word here is coordination. Historically, financial institutions have managed very siloed systems with different processes, tech, databases, and right now everything is put together through AI. And so now AI is embedded into the core functions, core flows of a financial institution. And this is onboarding, credit, fraud, back operations, back office. Everything is going more swiftly coordinated through AI. And I think that this is a major shift. On the other hand, this is also AI is becoming like a control layer on how money moves, and it's also shifting how money is moving and deciding which rails should be used, the speed of these rails. It's also deciding settlements. It's also upgrading the system, making it more cost efficient, and choosing also the most cost efficient rails. Okay, and so it's also becoming a control layer on how money moves, and I think that this is also a new shift. I think that definitely agentic banking is live, which is also a news. It's something that we are seeing financial institutions using actively AI, not just as a recommendation layer, but actually as agents taking actions. And I think that this is very important that it's policy supervised. I think that the banks that are doing this responsibly are very neat with governance, are very neat with an authentication upgrade, are very neat this also with a permission layer, an authentication layer. And so I think that governance is a key word in order to analyze what we will see next in agentic and going further this year.
Fascinating stuff. We'll have to get you back to talk to us about it again. Simona, we've completely run out of time. Really appreciate your insights today. Simona Alaman, who's the co-founder and co-CEO from Mateo. All right, coming up, we will get a closer look at the big picture with the team over at Charles Schwab. Morning Trade Live will be right back.
Bro, I'm on it. See, that's why I'm one of those that I do it. Not only am I gonna learn it, but I'm actually gonna do it, bro. Like I'm
Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
My kids be in here while I'm trading. I know you do.
Sometimes you know,
I know what you're saying.
Try it again. You could have done better. Same goes for where you invest.
They gonna learn.
Level up and invest smarter with Schwab.
They're not gonna learn direct, but they're gonna see you doing it.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live on the floor of the New York Stock Exchange.
What you was talking about, the terminology, all that shit.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade really great with Schwab.
That's all my mom and my dad
did. The trading day, that's when markets make
headlines
and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network. Welcome back to Morning Trade Live. It's time now for the big picture. Let's welcome in the team from Charles Schwab. Joe Mazzola, head trading derivatives strategist, Schwab Center for Financial Research, or I should say Charles Schwab, and Cooper Howard, director of fixed income research and strategy, Schwab Center for Financial Research. Joe, let's start with you. A lot of information this morning. Obviously, a very diverse earnings day. We've also had a little bit of data out as far as consumer confidence, not feeling so good about those kitchen table type issues. Obviously, then we've had some other trade headlines too. We've got the metals pulling back a bit off the back of this record run. So it's like pick your own adventure this morning. What's stands out to you?
Well, let's stick to maybe something that we know comes out every 3 months, and that's earnings. All the other noise, I mean, that can come out any minute, probably even while we're talking right here. But so far, Sam, with earnings, we got about 80% bottom line earnings beat. We got about 65% top line revenue beat. So both good. What we're not seeing, though, and I think this is what's interesting, is we're not seeing the markets reward the stocks in the same fashion that we've seen in the past. So you're not getting kind of that upside move, but you are getting punished if you don't meet. So there's a little bit of maybe some investor pessimism coming into these markets, and maybe it's just a feeling that the bar was set so high with a 22 forward PE, but it sets up a lot for this week, knowing that we have 4 of the 7 Mag 7. I think tomorrow with Meta and Microsoft is really critical for the market, especially kind of given that the AI trade has fallen out of favor a little bit. So those are really big data points that are coming out tomorrow.
Yeah, we want to hear about some of the demand. We want to hear about, obviously, the CapEx. We want to hear about the memory prices, how they're feeding through, and also, of course, the applications and use cases. But no doubt, Cooper, something you're paying a lot of attention to is the fact that the Fed members get their feet under the desk today, and obviously going to be talking and giving us a decision tomorrow. It's pretty much well baked in at this stage what they're going to do. What are you watching out for as far as what they say?
Yeah, it definitely is pretty much well baked in that they're going to hold rates steady. That's our expectation. And I think Joe hit the nail on the head, is that there's so much other stuff going on that really this week, what the Fed does is really going to take a back seat. If I look at the statement, I'm expecting very little change with the statement. Now, we do get the press conference. That's always going to be a potential wild card to see how does Chairman Powell describe the policy rate and the outlook for inflation, as well as the outlook for the economy. I do think that they're going to keep optionality open. If we look at the statement, I also expect that there's going to be a few dissents. We know, for example, Stephen Myron has been very much in favor of much lower interest rates than where we're at right now. But I don't expect too many fireworks as far as the meeting itself. Now, looking further out, I think what's important to watch regarding the Fed is the composition of the Fed. We know that Chairman Powell's term is going to end this year. Who does he get replaced by? Rick Reeder is gaining a little bit more momentum in the marketplace and the betting markets as far as that goes. So that's potentially a person to watch going forward. Also, what are some of the makeups of the other governors? We know the issues with Lisa Cook and mortgage issues there. Stephen Myron's term is also expected to end this month. He is expected to stay on a little bit. So the composition and the makeup, because as I've discussed with this before, Sam, it is not just one individual who's setting the policy rate. It's a committee. So who makes up that committee, I think, is what the bond market is going to be closely watching over the rest of the year.
Yeah, that's certainly something to keep an eye on, particularly this week, if we get any clues about that. John, just getting back to you and where you left off with saying, the markets have sort of somewhat fallen out of favor with mid-cap tech. Where does this leave the rotation trade then? Because it looks like we were rotating back into some of our mega cap tech players yesterday, ahead of the sort of positioning for these report cards. But given, obviously all the questions in the market around the ROI and then the elephant in the room being the power needed, the energy for all of these data centers as well, where does that leave things as far as the rotation and the small cap?
Well, let's talk about maybe just some option positions, Sam, if you don't mind, kind of heading into earnings expectations for, like I said, to me, the two big ones this week are Meta and Microsoft. I think those are the two that investors should really be paying the most attention to, just because of kind of what happened on the last earnings cycle and expectations. So expectations for Meta is around 7% move. Microsoft's around 5.5% move, just based on the options market. But what's interesting is what I'm seeing from a positioning standpoint is you see a lot of outside call buying. So the skew, basically, which measures the out-of-money puts relative to the out-of-money calls, that investors are willing to pay for that. They're actually kind of moving a little bit more towards the upside than what we traditionally see.
It's
see.
probably against. I don't
So
even know.
there are some expectations, I think, at least from the options market, that these reports could be pretty darn good. And so what do you need to look for? I think if you're looking for Microsoft or if you're watching Azure cloud growth, if you're looking for Meta's CapEx spending plans, whether or not they're generating any meaningful revenue from that. So those will be the things that I think you really want to pay attention to. Whether or not that tips the scale for the rotation trade, I think time will tell, because even today, as I continue to just look at where we're seeing percentages of stocks above 50-day moving averages, where we're seeing best breadth and relative strength, it still continues to be in materials, industrials, energy. Those are the sectors that are carrying the load right now. And Sam, we've talked about this before. I'm not positive that you can get all-time highs with some sustainability if you don't get IT and communication services in there, and that's why this week I think is so.
All right. Well, so far, as you say, an 80% beat rate as far as these earnings are concerned. Let's see what Meta and Microsoft say tomorrow. No doubt a bit of a high bar, particularly given the CapEx sort of indigestion we saw last quarter. Really appreciate it, gentlemen. Thanks for joining me today. Joe Mazzola, head trading derivatives strategy for Schwab, and Jim Howard, director of fixed income research and strategy, Schwab Center for Financial Research. Coming up, it's time for the morning trade. We'll take a closer look at health insurance stocks and bring you an example trade for United Health. Morning trade live. We'll be right back.
I'm going to ask you this. So when you trade, you have to, because like when you get like market subscriptions and you get like all this.
Trading at
like
Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens, streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning.
But could you copy trade? But could you copy trade your clients? Well, you're the one. Well, you're the one giving. Well, you're the one. Okay, well, you probably can. Oh, you said you can.
You can. So you can.
ASTX. From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell live at the NYSE.
High-speed data from now on.
So back to morning trade live. Let's focus on health insurers. United Health, Humana, CVS, and Elevance are all moving lower this morning after the Trump administration proposed keeping Medicare Advantage rates relatively flat in 2027. We'll see how much that is impacting these stocks right now. Down in double digits, we are seeing some heavy selling pressure this morning, despite the fact that after the weekend, United Health with respect to their earnings, but this story is not helping. So these stocks are the focus of the morning trade. Joining us now for a closer look at what is behind this move is Marley. Good morning to you. Just walk us through the details. Obviously, we first learned about this through the Wall Street Journal. But talk us through, obviously, the facts and some of the reaction we're seeing in some of these stocks today.
Absolutely, Jim. Good morning to you. Just showed on the screen that we are seeing a really negative reaction in terms of these healthcare insurer stocks. United Health down more than 18% right now. You also highlighted Good,
And the only
Centene,
reason,
CVS,
when I said
Humana. These
maybe
are some
hit
of
is
the
because
other big
eventually niggas is gonna
insurers
come back
here.
for their cheese, bro.
After the
Like
administration proposed
if a
nearly
high
flat
net worth
rates for Medicare Advantage. So Medicare
client
Advantage is a
got $2
privately
million
run
in your
insurance program
in your
that
company
now
and he wants
covers
to
more than
withdraw $2
half of
million and you
Medicare
like, sorry,
beneficiaries.
sir,
So
we
this
don't
does
have your
affect
money.
quite a lot of
Nigga,
people.
what you mean?
This
You know,
proposal
let's go
would
and enjoy
entail
your
that
shit
the
out
net
of my
average
cousin,
payment
hit that shit
only
off and
increase
hit that
by
shit
less
off
than a
and
percent,
the
9
under.
tenths of a
I
percent
wouldn't even tell
for
my mama
Medicare
where that
Advantage
shit
plans in
was, because you probably
2027.
would be in jail.
Typically, the
I
next
know
year
when
is
I get
finalized
out
in
though,
April, so not a lot of time to get this one hammered down if there are problems from the insurers. That number is significantly lower than what was expected from the street. They thought the agency would propose a rate increase of between 4 and 6% next year, and it's less than 1%. So a significant departure there from what was expected. Now, this payment rate determines how much the insurers can charge for monthly premiums and plan benefits that they offer, and then, of course, ultimately their profits. But CMS Administrator Dr. Oz came out and said that this is about making sure that Medicare Advantage works better for the people it serves. This is all tied to affordability. They say that by strengthening payment accuracy and modernizing risk adjustment, CMS is helping ensure beneficiaries continue to have affordable plan choices and reliable benefits. Now, you mentioned United Health came out with its earnings today sort of in conjunction with this announcement. They're saying that this notice from CMS doesn't really reflect the reality of the cost trends in 2027, and that it's not in line with what medical utilization costs are right now. They say they're going to continue to work with CMS to ensure an appropriate final growth rate calculation, but they are concerned about underfunding. As far as their EPS came in beat by a cent, and their revenue was a slight miss, but most of the moves we're seeing today, Sam, are because of this announcement from the administration and a potential major hit to profits for these companies.
Yeah, I think it's interesting on a day when we get the consumer confidence out from the conference board dropping to a 12-year low this month. I mean, it's just how people feel about the state of the economy right now. As you say, the administration is very much trying to address affordability right now. But thanks for getting us across the details this morning, Marley. I'll chat with you a little bit later on. It's traded now in Tim Vegan option strategy, that Pilot AI. Tim, it looks pretty ugly out there for some of these names in this business. How are you approaching your example trade for United Health, given that we also had earnings out this morning, but the market's looking past that and is stuck on this Wall Street Journal story?
Yeah, absolutely, Sam. Looking past earnings, which were, tepid at best. Certainly a slight pullback on the revenue miss on earnings. Might have been expected, but today's news trumps all, no pun intended. We're back below that 300 support level on UHH, which has held for a very long time. And we're actually seeing implied volatility because of the news and the huge move down of almost 20%, as you were alluding to, spiking IV, especially in the short-term options. So I'm just thinking that, like everything else, probably some negotiation may be coming on this. So I'm taking a somewhat guardedly bullish stance for a move back towards that 300 now resistance level on UNH, going out by traditional February 300 calls, selling this week's 300 calls, getting a nice touch of knowledge. It's almost like you're getting the earnings edge with earnings already coming out on this trade, buying around a 40 IV, selling over a 60 IV, paying just under $5 on the trade. So I think, somewhere over the next couple of weeks, we'll probably get maybe a little retracement or maybe a little negotiation on this. Plus, we have the weeklies, 3 sets of them to continue to hedge or chop wood, as I call it, continue to defray that initial cost we pay on the trade.
Okay, so we are trading down 18%, no doubt, but one of the components that is dragging on the down this morning as we look at a mixed picture across our major aggregates today. A very sort of earnings-driven story type day, given that we have a very diverse lineup of companies reporting, not to mention the FOMC getting underway as well. How do you think about things in the market this morning?
This will be a very interesting week, I think. The Fed meeting pretty much a non-event, maybe a little jibber-jabber coming out of it after may rankle the markets a little bit here, but we're seeing 20% of the S&P reporting and 3 of the big heavyweights, actually 4 coming out tomorrow and Thursday. So it'll be interesting to see with valuations at historic highs here. Earnings better be good and beat by a decent basis to kind of support the valuations. How the market reacts to the earnings on these names, the Microsofts, Metas, Apples of the world, I think will be critical going forward. Are these stocks finally officially cooling off? They certainly have gone sideways here. And will we get a pullback or not is really the big question. I think they really have to beat by a good margin and guide much higher to support the current valuations here.
Certainly looking for that next catalyst. No doubt some of our Mag 7 members might do that for us. But let's wait and see. Tim, appreciate the insights as always and the example trade. Tim Bigham there, option strategist of Pilot AI. Coming up, we'll take a closer look at the sectors on the move this morning and the news we're following in overseas markets.
It's a small percentage as to what that's us. Like I said, I'm not big into crypto, but I'm not against it. But that's probably one of my biggest things about it. Like, I've seen niggas bro, I've seen niggas get robbed, bro. I've seen niggas
if you got self-custodial crypto, offshore accounts can't be frozen. It's just physical cash, obviously, but you know what else is it? Exponent funds. So certain shit
they want that shit frozen, they'll freeze that shit.
Bro, I've seen niggas get gold.
Niggas, they can take a whole country.
It's a self-custodial crypto held in private wallet.
They can freeze your money, bro.
That's the only way. That's the only way they can't find. Because
so like you said, if you got your crypto,
you gotta have a cold storage key, bro. It's like it's a cold storage key. It's like you put your money on a hard drive and you hide it. That's the only way to retrieve your cheese.
I feel like, bro, you got some.
You talking about actually put that shit in a hard drive?
Yeah. It's literally on a key. It's literally on a hard drive.
I know. It's hard.
And then, I'm talking about the Heba. Because Heba said, is it literally on a hard drive, like a physical hard drive? Yes. It's on a literal hard drive that you
USB or a hard drive or something like that. Some type of storage device.
Morning movers, be the first to find out what's shaping market action. Check. Options Corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern.
They might not be able to take the money from you, but they can track you. If they can track you, they can track you.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime, wherever you are.
So it's like they might not be able to take the money from you, nigga, but they can stop you from using it. And when you do use it, they'll
Live
get
from Chicago,
you know
this is Trading 360. I'm Marley Gator. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
It's very hard. It's not as easy. It's not as easy
Welcome back to Morning Trade Live. I'm Sam Barnes coming to you live from the New York Stock Exchange. It's time now to look at the sectors that are moving markets this morning. And Alex Coffey is here joining me to do just that. And Alex, we're looking at a bit of a mixed picture beneath the surface. But I did see a stat this morning. I love stats. Meat on the bone. Consumer staples having the strongest start to the year in 25 years, and the folks over at Wells Fargo predict a short-term flight to safety. Now, obviously, we're not seeing that today, but when you put it all together as far as sort of the more trends that we're seeing with respect to some of these sectors, I don't know if you have any thoughts on that as far as what we're seeing today, but yeah, what are your overall takeaways right now?
Yeah, today's kind of a blend of the last several years of price action with what we've seen over the last maybe month and a half, 2 months, and the trend of the last 2 months has been rotation and broadening, and the trend of the last several years has been concentrated in mega cap tech driven, and today you're certainly seeing the mega cap tech element outperform when you see, we'll get to that in a second, but Magnificent 7 leading, the NASDAQ having nearly 2/3 of the 100 stocks that make up the NDX, driving the action, where in the S&P it's less than 50% and names higher. When you look at the sector performance, though, and your year-to-date so far, really only one sector is underperformed, and that's been financials. Conveniently, it's the worst-performing sector today as well, down about 1%, down about 3.5% on the year. When you look at information technology, before today, it was also down for the year. So going into some pretty critical earnings events, Sam, over the next several days for IT, but with it leading today up 1.6%, it has swung what has been a red start to this January in 2026 to a green January so far.
Their key phrase. Yeah,
what the fuck?
That's interesting because it had a sort of rocky end to 2025 in the financials you point out is quite interesting too. Because of course, there's been a lot of analysts out there quite bullish on the financials given some of the stories in the market, like the yield curve, and obviously some of the credit card policy headlines have been weighing on things. But you mentioned technology. Our story today very much doing the heavy lifting as far as S&P and the NASDAQ are concerned, and managing to offset some of the weakness we're seeing from some of these earnings, these healthcare headlines. Talk us through the setup as far as Mag 7 ahead of some of these members that are going to be reporting in the next couple of days.
That reason right there is
6 and 7 are higher today. Meta is the only one that's under a little bit of pressure, and it's 20 basis points to the downside. Tesla is flirting with unchanged at the moment, so it could be red at any moment. But all in all, if you were to index this group, they're up about 1%. They're outperforming the broader NASDAQ 100, and they're outperforming the broader S&P 500 by a factor of about 2 to 1. And whenever you have that, when you have these names out in front, it's really difficult without some sort of a change to that performance to see the market go meaningfully red. So this is where I begin and end a lot of my day's analysis. And whenever you have these names stacking in one direction, the correlation is pretty strong as for where the market's going broadening-wise after that.
You must be in a trade.
Yeah, and obviously some of the news around Meta this morning is this deal with Corning, which is heading in the other direction, just fractionally down for that stock Meta in the trading action this morning, as you pointed out. Alex, really appreciate it. Thanks so much for breaking that all down for us. Turning our attention now to global markets, and it's all about
before they did their split.
The EU and India finally getting a free trade agreement over the line. What's being called the mother of all
the video was
deals.
a good
It's
mover
the
too,
biggest
but Tesla, bro, Tesla was giving out 1,000%ers daily, and I remember, bro, my homie was catching, my homie Ray, the engineer, I used to multitask that nigga was 1,000%ers
European shares
daily.
mostly higher on the session. India's Nifty 50 closing up 0.5%. Meantime, President Trump says he's hiking tariffs on South Korean growth pharma and other goods, accusing Seoul of not living up to its deal with the U.S. The president says they reached a great deal in July and reaffirmed the terms in October, which capped duties at 15%.
I feel like split it when it was $900. I remember the day they split it too.
In the U.S. The South Korean Kospi, though, initially falling on the news, but then reversing another record high, closing out 10.7% higher. It's up 21% year to date. Auto companies like Honda, Kia, seeing shares selling off sharply before pairing those losses throughout the session. The small cap index trading over 1.7% to a more than a 4-year high.
I got some of it.
Coming up, it's time for Inside Out. We'll take a closer look at memory stocks ahead of Seagate's earnings and bring you an example trade when morning.
I was hoping to see some in IWM, but that shit ain't moving at all. RR done ripped up 20%.
These two is almost always opposite of each other.
That is wild.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, planning, whether you're ETFing or 401k, saving, spending,
RR going up $1 right now.
You can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
We are about to hit all-time highs.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer,
highs.
we focus on what's driving investor sentiment
Right
right now.
Clear analysis and forward-looking market coverage every trading day.
I just need to pull back to the 5 EMA, and then I'll take more calls.
That could certainly be
More
a
cars you
to
still in?
near-term
Want some
catalyst.
cars?
Next
Nah,
Gen Investing,
well,
4
not more
p.m.
calls. I'm
Eastern.
gonna take some
Only
calls.
on
I'm sorry.
Schwab
I
Network.
only took pussy there.
Whether you're an experienced investor
But in
or
that
just
first
getting
pullback
started,
early,
Charles Schwab offers
first
a
5 minutes of the
webcast
market,
that's right for you.
took some push for
Are you a
38%.
long-term investor? Our investing webcast series breaks down different investing styles, including growth,
Yeah, I missed that first law opening of the
and more.
market.
Best of all, you can
Would've probably
ask
took this
questions
cause
by
of,
chatting directly with an education coach. It's interactive learning at its finest.
night before.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
We're back on Morning Trade Live. We'll get a closer look at the memory trade this afternoon when Seagate reports earnings. Check out how much these stocks have rallied just here in January. Do we need to remind you? Seagate, Western Digital and Micron are up more than 30% in 2026. But Sandisk continues to be a rocket, up more than 100% in the last 3+ weeks. Wow, look at that. All right, let's go inside out on these memory stocks. Joining us now is Nitin Sacchetti, founder and portfolio manager at Iris Capital. Hey, Nitin, thanks so much for joining me this morning.
Thank you for having me. I appreciate it.
We're going to get a first look at the memory space this afternoon. What are you expecting from Seagate?
I think it's tough. I mean, I think when we originally bought the stocks, like you and I were talking earlier, there was, the analysis was really looking at channel inventory and figuring out when inventory was going to decline, when they were going to start growing again. And the stocks were trading at 7, 8, 9 times earnings, 14 months ago when we started to get involved. Now it's really an AI trade for the most part, right? And now it's sort of determining the length of the sector. When I met with Western Digital and Seagate a few months ago, they talked about how now they have long-term agreements that give them price escalators out 12 to 24 months. So I think you probably have more stability of earnings, but we'll see, because even a small hiccup at this point will sort of create more volatility in the stocks.
What would a hiccup be? Because, I mean, these guys have tight supply.
Yeah.
They've got the demand. As you say, the AI data centers are sucking the oxygen out of the room. They're raising prices. You've got the South Koreans talking about 70% in Q1. They're trying to build out capacity. They reckon that they've got another couple of years now to go as far as, this situation, as far as the sustainability of, these high prices. What would be a risk?
I mean, I think it's really just expectations are that high, right?
Right.
That's what's priced into the stocks here. So if, gross margins are slightly below kind of the low 40s as expected, if pricing is slightly below, if they haven't rolled out some of the some of the hammer drives in terms of qualifying cloud customers. I think the point is, we still own the stocks, but the expectations are very, very high. So I think that's what would cause that slight hiccup.
It feels like the theme that's emerging in this earnings season is one of, the demand is there. They're just not being able to meet some of that demand. I mean, we've heard it from Intel, we've heard it from TSMC as well.
Yeah, and you hear it from the NAND and from the DRAM companies.
That's right, and we're going to be hearing from Samsung and SK Hynix, two of the biggest players here, but internationally as well this week too.
I'm learning the game.
Can these companies justify the triple-digit gains we've seen last year?
I mean, I think it really, again, depends on the length of the cycle. And so we're really focused on kind of the data center builds and when those slow. I mean, you're not seeing any signs yet of that slowing happening. But, call it 2027, 2028, 2029, I think that's when at least we think that if OpenAI can't get to AGI, that's when they have a big hole to fill in terms of the funding gap. And that's when you start to see the data center build slowing. And so for us, I mean, at the end of the day, we're long short, we hedge. And so we are hedged sort of at the tail in terms of some of the very, very asymmetric, puts we own and so forth, and some of the data center builders. And so that's the way for us to sort of continue to play AI from an inference perspective with the memory names, because every time you and I do ChatGPT queries, right, it uses DRAM, right? It's got to get stored on hard disk drives and NAND. But then on the flip side, if some of those data center spends by 2028 decline, some of these stocks that are pricing all of that in are going to start declining, and so that's why we're sort of buying insurance on the tail to offset the long exposure we have in the memory names.
Got you. And yeah, look, the way that it was put to me is that the story right now is that there's no point in having the data if there's nowhere to store it. I mean, it's a bit of a no-brainer from that perspective.
Agreed.
Hey, look, Nitin, we're a bit guilty of kind of chucking these all in one bucket, as far as when we talk about the memory stocks. But just talk us through which players are well positioned in this so-called super cycle as far as the pure plays versus some of the others, because obviously we know the top tier guys are sort of the Microns, the Samsungs, the SK Hynixes. They've got the tie-ups with the Microsofts, they've got the tie-ups with NVIDIA. But just talk us through sort of the breakdown as to who is likely to be sort of emerging this year more as sort of the winners and the losers, perhaps.
Yeah, I mean, I think you have kind of different
ways to earn with
right? You have
Crackle.
DRAM.
Whether
One
you
is
want
DRAM,
passive
short-term
rewards that
memory.
run in the
So
background,
the
like
more
auto
scaling
work,
that gets done
where you
with
can
the
earn up to
models,
11.
the more of
I
that
got
kind
you,
of
lady.
DDR4
Good.
you need, right? And so that's Micron. That's
Somebody got that.
right? And then you have the next step, which is the NAND, right? And the NAND is the Samsung,
Why you
SanDisk that
doing
you
that?
mentioned, and also Micron.
Why
And
you
that's,
saying
where
that?
you're calling, inferred data
What'd you say?
up really fast for your
He said he'll call you.
And then the third piece is really kind of the cold storage, which is the hard disk drive.
I'm not even late after the play. He be missing the plays. I don't trust him. He be missing the plays while we sitting here talking
right?
about
And
it.
not really being
I know about that.
quickly the way they are on the NAND, but that's the supply chain, right? And so we think through that, and we think
Like a puppy, like a little puppy that you throw a bone out there, that nigga just forget everything.
So I think it's all sort of going to continue.
What happened?
I think you have three players in
Boom.
DRAM dimension. That makes
Lackadaisical.
the barriers to entry a lot higher.
Right.
You have two players in hard disk drives that
Attention
make the barriers
span
to
shortage,
entry
yeah.
higher. In NAND, you have a lot of players, and then you also have more Chinese competition.
Right.
So we've seen some
point.
isolation or installation based on the Chinese
Right,
not
ain't none of
being
my friends
allowed to
start to
sell
Yeah.
into
Feel like it
Western
might pull back.
markets.
Yeah.
And so the question is, I think
Just a tad
that's
bit.
What trade zone? I think the whole market
your
rate pulled
big
back.
factor
I got a leap
pricing.
on Archer.
Gotcha. Nitin, fascinating chat. Thanks so
I
much
got
for the
a leak on
setup
that
ahead of
penny
Seagate's
stock.
earnings. Really appreciate it. That is Nitin Sachetti,
Let's
founder
get
and portfolio
liquidated, but
manager
it's really
at
filling up the
Papyrus
gas room.
Capital. Let's trade it now with Tom White, host of Fast
Penny
Market, with an example
stock.
trade for
CTO,
Seagate.
not
This morning,
Palantir.
just said there, the bar
Nope,
is
not
high.
Palantir.
Tom, what are you seeing? What's the
Or
approach?
Jova.
You can say that the bar is high. It's
Yeah.
stocks at all
Our
record
body.
levels today. Overbought on a technical basis. The
And I'm about to put
RSI
some
is
money
above
on my
the
accounts.
70
I
level
figured it
at
out
this
now.
point. And if you take a look
that's on
at
my,
with the option
Van
markets
Jovi
pricing
call.
in, about $32 either way,
Jovi
about
call,
8.5%
Bro, you know I was
in
in
either
Black Sky,
direction
Black
on
Sky
this
with
one.
that
But the
either.
bar's high. Remember,
The hell
they're
is
sold
Black
out
Sky?
through
Cuz how do you be
2026
knowing
as
about
far
these
as their
freaking
chips
tickers,
goes.
cuz?
They
So
keep my Q
will
card
this
ripped
be
up.
another one of those
My Q
Intel
card went
type
like
of
a 5X.
moments where,
I took
hey, they
probably
had
two early
demand,
ones.
but the
What,
production is
500%?
just not there. So I looked
Yeah,
at a
something like that,
strategy, takes advantage of maybe some consolidation, maybe a slight pullback, giving yourself better probabilities of success. Went out to the January 30th weekly cycle,
That shit was like
expires
$100 and some
in
dollars.
just 3 days. We're going to sell an out of the money call vertical, neutral to bearish. We're going to sell the
It's
400
still up.
strike
It's still
call
up pretty good,
and
too.
then buy the 410 strike call. So
I
a
couldn't
short
get back
$10
in there.
wise,
I was trying-
neutral
I was
to
gonna put
bearish,
money back
call
on it, but
vertical,
I'm thinking about
collecting
doing the
roughly.
same
I've
for
got
like
280
in the
credit on here. It's probably trading over
some
$3
this money.
right now, so you could collect a little bit more. But that takes
might
your
be a
break even
little
if you collect
unfair.
280 up to 402.80 to the
Even
upside.
my money I got.
That's over 6% above the current share price. So
I'm still waiting on
nearly
the
that
strategy.
one standard deviation move that the option market's pricing
Alright.
in.
I could
You got a
probably
probability of finishing out of the money of
If I put
close to
200
70% on that short 400 strike
Yeah,
that
if
you're
I
selling
put 200
in
on
the
this
strategy.
strategy,
I think one of the
What am I
keys
gonna
with
do
these
now?
high
Do
price
they, what do you
stocks,
got, a laptop
big
that you take
moves,
from work to
expected
home or
staying
something?
risk
Or you
defined
got a work
on
computer at
this.
home?
But break even at
I got 3
402.80 to the
monitors at the house,
upside if
and
you
I got
think
3
the stock's
monitors
going
at
to
the
at least
office.
consolidate,
Also, what do you like,
go
VPN?
lower,
Do you got
or
like a
hey,
VPN
you could
code
be
or
wrong and
something?
the stock can go higher. You just
Yeah,
want to
Connect to
remain
your jobs
below
network or something?
402.80.
we use
All right. Well, we've got
We use
Seagate. We're
Zscaler.
sitting up 6% into this report card later this afternoon. Tom, thanks so much for the example trade for us today. As we look across these major indices today, we are pretty mixed off the back of a very diverse earnings morning. We've got more to come later this afternoon. Thanks for joining us here on Morning Trade Live.
That's how I caught it, that quick ass. I remember when
Available
Crowd
in the
Strike
Apple
was
App
pulling
Store.
back.
You've got Trading 360 with Marley next.
Niggas was like, oh my god, Crowd Strike.
Schwab Bank
them niggas
Investor
had
Checking,
showed
the checking
all
account
they
built for
clients,
investors,
bruh.
named
That
highest in
shit
client
ran
satisfaction by
straight
J.D.
up, bruh.
Power for 7 years in a row. With Investor Checking, you get the award-winning
The company
features of our
gotta show
checking
all
account,
his
plus
clients, bruh.
cash management
I'll
solutions,
let you know,
all
nigga, we got
designed
something,
for
nigga.
investors like
We
you
ain't
with
hurt.
unlimited ATM fee rebates for
We got
cash
all the
withdrawals
airlines, we got
worldwide,
all the
no
tech companies,
overdraft
and
fees,
Crowd
and
Strike is
enhanced
what that
security
is.
features to keep your money safe. Also,
I feel
because your
like
investor checking account is linked to your Schwab Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash move to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
GITS. Look at that shit, boy. When that crowd strike shit happened, nigga, I was in motherfucking Ibiza, bro.
Real-time market
My flight got canceled.
strategy.
From the
I was
opening
pissed.
bell to the
Nigga,
closing
I had to go
bell,
back to
we've got you
Barcelona.
covered.
for the day and then catch a flight to London.
Get inside the minds of pro traders.
My flight got delayed like 7 hours.
A higher rate of change in
Oh, for
sales
real?
based on their
And
guidance.
then we had like left the we had like
The
went,
biggest
we had
headlines,
checked out and
live
everything.
analysis,
Got
breaking
you
news,
know
and sharp trade ideas.
got to the airport.
minute by
They niggas
minute.
have to sit
With shows
around.
built for action, we break it all down in real time.
We had put the
with
rental
speed,
up and everything, so it's like we
and
wouldn't
precision.
we
I
weren't
think
gonna
one of
just
the
like
most
get another
important things
rental
is
just
you're
to,
making a play in a
like, ride around
risk-defined
and
way here
sit
going into
around,
earnings.
either in the
So
airport.
that would be a
Right.
further downside area to watch.
Smart insights.
Finally, they got us on a
Actionable
motherfucking
data.
plane when that shit got back up.
Veterans
And,
and trusted
I
financial
remember that
journalists.
blue
Streaming
screen
live
shit,
and
nigga.
on demand. Schwab Network.
This
Streaming
can't be
24/7,
happening while I'm on
any
vacation
screen,
in another country, bro.
anywhere, free. Schwab Network.
It can't happen, bro.
That's crazy.
Every time some
when
shit
my
happens,
grandparents
bro,
moved
it be
here,
around
did
my
they know
birthday,
our
bro,
family would
and it
become?
be
I
around
don't
my
even know if they could
vacation.
envision
Always
it
happen
to
in
leave
July.
everything
Market
behind,
always do some crazy
literally
shit
come
in July.
across the entire world. I
Market
think that
always
we
pull back
totally
right around my
met what
birthday,
their
bro.
wishes were.
You know why?
Schwab
I
has
see.
been with us for
Yeah,
almost
that
25
motherfucker
years
do.
through purchasing
Right
our
around
houses,
July
opening
18th,
up our business,
July
having
20th,
children. They've
around
always
that area,
been there for us.
motherfucker
I
always
want
have
to
some type of
invest
pullback.
with a company that can help me give my family a happy
Get
financial
some
future.
shit. That might be this peak holiday travel time,
Stay
but
connected to what
probably be
moves
some fucking
markets.
shit, bro.
Download the Schwab Network app and get live coverage wherever you are.
Oh my fucking god, bro. I hate everything.
You hate everything because you just lost some money?
Alright, we're good. You good? Can't go.
What happened, bro?
My wife at.
What happened?
My wife at.
What happened? I want to get that new monitor. It's like 3 monitors in one.
I don't know if I've seen that.
It's like
Good morning. We're 90
Is it an
days into
attachment?
trading
Is
day.
it like a
Welcome
monitor
to Trading
attachment, or is it
360.
like a
I'm
monitor
Marley Caden
itself?
coming to you live
No,
from
it's like
our
a
Chicago
big curved
headquarters.
ass
We've
monitor,
got a lot
but
in
it's like
store for
3.
you on this show today. Of course, earnings season
Oh,
continues.
it's like
We'll
one
highlight
big monitor
energy
that goes
stocks in
all
our
the way
360
across. Yeah, I've
spotlight
seen
and
that.
discuss the outlook for the
Like
sector.
I've seen a lot of
Also,
traders have
Micron's
it.
price
Like,
target raised by Mizuho. Shares are creeping toward
I wanna
another
have
record
like
high
6,
today.
but
George
I
Tillis
mean,
will take us
that's
through that
OD.
note and also
You don't
have an
need
example
6,
trade
but-
for us in our disruptor. And Boeing is lower after its earnings report this morning.
At
We'll
work,
take you
I
through the
legit need a
numbers and
3.
highlight some of
I
those
need
key
a
areas to
3.
keep an eye on in our 360 round. Before we get to all of that and more, though, let's take a look at how the markets are shaping up as we start this Tuesday morning. A bit of a split picture here. The S&P trading 0.5% higher at 69.85, getting closer to that 7,000 mark. The Nasdaq at 25,955. That's almost 1% higher on the morning. The Dow lower, though, trading down 0.75% at 49,048. And the Russell 2000 marginally unchanged, but on the negative side right now, 26.58. The 10-year is ever so slightly higher, 1 basis point at 422. The dollar's at 96.24, weaker today. Gold above 5,000 again, 5,086.20, but mostly unchanged on the day. Crude oil 61.63 a barrel. That is higher, more than
Playing
1.5
what you
higher,
could.
in fact.
Yeah,
And
PayPal's
Bitcoin
not letting me
0.5%
lose money
higher
on
at 88,040
I'm having
right
trouble
now.
losing money
I do want to talk about one of the top movers post earnings this morning with our first
It's all
guest,
good.
Alex
It's
Coffey, our
just
senior equities
annoying.
contributor here on the
It's
network, joining us.
EHG.
General Motors has a new high this morning on the heels of their earnings. A very good report. Last I looked up, more than 9%.
Yeah, pushing 10% to the upside, as you mentioned. Biggest move to the upside, I
It's,
think, since October on an intraday basis. So,
PayPal's not-
nice day, no doubt. And on earnings that I think are mixed, but some optimism here within this report certainly got the street excited. Adjusted EPS, $2.51. Did beat the estimates that I saw, and also were an improvement year over year from the $1.92 posted last year for the same quarter. Net sales and revenue, though, did miss slightly, Marley. 45.29 billion was a little bit below estimates. Also represented an over 5% decline year over year. This was driven mostly by a 6% decline in their automotive net sales, which of course is the bulk of their revenue. Their financing arm did continue to outperform, beating estimates, and was up about 4.6% year over year. It wasn't just a North America story. International sales weak as well. From a vehicle unit standpoint, down 9.8% year over year, missing estimates from the entire bucket. That's 11% North America, and though more on a relative basis, improving international-wise, but still down 3.7%. CEO Mary Barra saying they expect the North American margins to be back in the 8 to 10% range. They also expect to get to an industry-leading onshore production of 2 million units over the next few years to meet that increasing demand, and of course, sort of where the policy headwinds are shifting for companies like this. On those lines, they did say they mitigated about 40% of the $3.1 billion in gross tariffs from last year, and also approved a $6 billion share repurchase authorization, which probably helps that EPS story and certainly helps the stock story today.
It certainly does. I mean, and it's interesting to see, you highlighted it is a bit of a mixed report. It was a slight miss on revenue. Some of the numbers weren't ideal, but very interesting price action we're seeing on the wake of some of these reports, because some of them have great numbers, great guidance, and move downward. But GM's story's a bit different here. As far as how analysts are responding, I obviously see how the market's responding. But if we had any analyst commentary?
Yeah, there's been a ton. I'll give you just a few high level. One from Piper Sandler. This is Alexander Potter. GM executing at a high level, and in our view, this being Piper Sandler's, investors should own the stock. And then everyone's favorite market bull, Dan Ives, weighed in, saying, hey, the print included a slight top-line miss. It did include a strong bottom-line beat, and said that the guidance, particularly because of the impairment charges around the EV business, is good and yet conservative, but saying, quote, GM continues to navigate this difficult environment flawlessly to deliver strong bottom-line returns with significant cash flow. So, again, Dan Ives weighing in, optimistic, $95 price start with an outperform rating.
All right, and that's still higher than where we are right now, even with that 9% move to the upside, thanks to Alex Coffey, co-host of Next Gen Investing, for breaking down GM's earnings for us. And the move we're seeing in the aftermath, though. I do want to transition to our next guest. Joining us now, Samuel Dyer Bakerly, founder and private wealth advisor at Generation Capital Advisors. Samuel, great to have you on. I saw your notes that you sent over, and I love how you phrased it. You say you are a proud bull, but not a raging bull. So you're constructive, not euphoric. What does that mean for investors right now?
Well, it's good to be with you, Kaylee. And yes, I wish we could continue the raging bull as we have the last 3 years. But what the proud bull means to us is we think we're in the 4th inning of a historic secular growth cycle. And believe it or not, the number one catalyst in our mind is going to be 2 25 basis point Fed cuts by, I can't believe I'm saying this, by Rick Reeder. That is going to be imperative to stabilize the 10-year bond, which is going to dictate how 2026 performs for equity investors and candidly for retirees in managing real returns on the fixed income side of their portfolio.
Rick Reeder, you think that you're going with the markets here, the prediction markets, and I know that he's been rising in the prediction markets. What makes you confident that it will be Rick Reeder?
I think we need stability and credibility, and let's be candid about what's going on with the White House and the Fed. I think Rick Reeder brings that respect from the street that he's going to do what's in the best interest of Americans and managing, a really challenging proposition, which is rates and employment. And I think a lot of folks tend to forget where we came from 2020 to here. I think that we've done a decent job of navigating the Fed to here, but now it's going to be imperative for what the next 4 years look like. Especially when yesterday 5, 6, and 7 in our view. And it's going to be imperative that we have
88,
somebody that
and then I
commands respect from the
take, and
street
then I
that can
walked
stabilize
away.
that 10-year
But I
bond,
had
because
calls yesterday
if we
at
get lowering
115.
rates and a decoupling of
For like
treasuries to the
150%,
upside,
I
that's
didn't
not
even
going to be
take them.
pretty for investors, and especially retaires.
98%,
And in your base case,
88%.
do
I caught a
any
nice
of
little
these rate
38%
cuts,
of
these
the
two
day.
that are in your base case,
Day
happen
before
before
that,
we get the
we
new
caught
Fed?
a nice 90%.
Those are going to be made by
Day
Rick
before
Rieder, in
that,
my
we
mind.
ended up, oh my
Okay.
God, that
All
trade
right,
was
so
great. I
as,
think I ended
as
up
we
catching
look
like
at this, and you're
160
proposing that we have
something
two,
percent
they're coming in the latter half of the year
Well,
then,
I think it
how
does.
would you go about
I
positioning
don't
in
know.
this?
I caught the
Are we
trade
broadly
without a call.
positioned? Are we
I literally just
focused
told you I
in
couldn't
mega
put mine
cap?
on
Are we
my
looking at mid and small cap? Where's the best opportunity right now?
I caught my
Kelly, I think
trades
it's
down there.
important to
Hey,
take
bro,
a step back again. And what have we learned from the last 10 years? I was thinking about this morning. Remember the Fang, right? Everybody hated the Fang, and then it was the Fang Double A, and now it's the Mag 7, and everybody hated that. And I tell investors and clients every day, let's avoid the silly, multi-factor, crazy ETFs. We want to have a globally positioned portfolio, and you're seeing that year to date in small, mid-cap, international, and emerging markets. Our view is hold steady on your international allocation. That's going to be a ballast for diversification from the U.S. On the EM side, there's a really compelling story there with dollar devaluation, diversification from those mega cap names. And don't be shy about small and mid caps. There's a lot of tailwinds right now in the U.S. economy, combined with OBA being built in, deregulation, onshoring. So I think that you want to maintain diversification. And we would tell investors to stay away from things like equal weight. That's been a popular trade to talk about in the media, but over the long term, we believe that's a bad trade. We actually kind of refer to that as more of a kind of a participation trophy trade. We want our winners to win and our losers to lose.
And as we take a look at international exposures in emerging markets, are there particular sectors that you like, or are you sort of broadly positioned across all?
Yeah, the compelling thing is to find it to space, but we like that broad-based exposure. I think in emerging markets there's a case to go EMXC, excluding China. That's if you have a particular view on dollar exposure. But we tend to like that beta exposure. I oftentimes joke with our mainly U.S.-based clients, can you name me 15 international stocks right now? But we prefer that broad-based beta exposure, especially in EM. You can kind of pick and choose your battles. Obviously, Korea and Thailand look compelling. There's really great diversified AI exposure there. But we're telling our clients, let's get that beta exposure, and we're ticking up that exposure going into this year, and we have.
Especially if
still in
you're
the first month
self-taught.
of the year, a lot of the conversations I had,
But at least
particularly in the first half of this month, were about
make a whole
outlook
bunch of
for
money in a
2026.
couple months
And a
just be up
constant
a beat like
conversation
that
has
ain't
been
that.
around this potential for a pullback. Lots of people predicting a pullback, a variety of sizes, and how big that pullback might be. But what's your thought on that? Are we right for a pullback? And if so, how big might it be, and when is it
There's so
coming?
many shits you can look at.
Well, I think we are. I think that 5 to 15% pullback, late spring, early summer wouldn't shock us. With that being said, I wouldn't recommend raising cash in preparation for that pullback. But markets like to test new Fed chairs, and what I would tell your listeners out there is, if you have cash, the number one thing you should be looking to do is put together a plan to deploy that cash. So let's look back to last April when everybody was freaking out and thought the world, you were never going to be able to invest again. People were raising cash, and some people unfortunately missed one of the greatest market return recoveries of all time. So if we have that opportunity, we're telling clients, if you have excess cash or if you're an accumulator, be prepared to put money in the market. I always joke with folks, if we get a 20% pullback, we're buying stocks. If we get a 30 or 40, which we're not predicting, but we're buying stocks on margin. You want to capitalize on these generational opportunities when they present themselves. And in a midterm year, there's always more political rhetoric. Everybody's trying to find their base and see how far they can go. So I think additional rhetoric plus new Fed chair is going to provide a prime opportunity for investment for investors.
All right, let's talk about fixed income here, because that's a big part of this component here as well. For retirees, a lot of them saying that it's difficult right now, and you even make an argument that fixed income isn't truly fixed, nor is it actually income. So walk us through that, and also how retirees should approach the fixed income space right now.
Really do need to sell off like that.
Yeah, I mean, it's really hard to get excited about 3 and 4%, but what we're telling retirees is exactly that. Fixed income isn't fixed, nor is it income. Now, we look at fixed income as a ballast, and what to the investors out there that are being pitched, a lot of products are coming out right now. You're seeing a lot of buffered this or hedged this go down so you can rebalance. how do you approach that? Our approach is kind of barbell it. Hug the belly of the curve with shorter dated bonds, which could be a little more expensive, but give you kind of that freedom and lower volatility, and long